In early 2005, as the negotiations were getting underway, the Los Angeles Times published a scathing expose of Americast. The headline read, "Workers say lender run boiler rooms." Among other things, the history noted that lawsuit filed by customers in California and at least 20 other states allege a pattern of fraud. One person who read the article was Robert Gineitzda, the general counsel of the Greenling Institute. Over the year, Robert had become friendly with Arnold, seduced by this charm and his seemingly sincere commit the good lending practices. He said they were trying to be the best subprime lender in the country, and I thought this guy. When I look a homeowner in the eyes, by 2006 there was a distinct Dr. Jekyll and Mr. Hyde-like quality to Angelo Mosillo. The good Angelo had been warning for a surprisingly long time that his industry was heading into dangerous territory, and the ply concerned about credit quality in the overall industry. He said in the spring of 2005, I think that the amount of capacity that's been developed for subprime is much greater than the quality of subprime loans available. A year later, he said to a group of analysts, I believe there's a lot of fraud in state income loans, and he flatly told CNBC's Maria Bartiromo that a housing recession was on the way. I would expect a general decline of 5% to 10% throughout the country, some areas 30%, and in areas where you have a heavy speculation, you could have 30%, he said. But Angelo insisted that none of this would be a problem for Countrywide. Countrywide wasn't just some fly-by-night subprime lender. It was America's #1 home loan lender. Mosillo, another executive, repeatedly stressed the high standards that Countrywide used to mark its mortgage. Countrywide's proprietary technology would help it avoid any foreclosure. Mozilla told investors, according to the Los Angeles Times, when I look a homeowner in the eyes. By 2006, there was a distinct Dr. Jekyll and Mr. Hyde like quality to Angelo Mosillo. The good Angelo had been warning for a surprisingly long time that his industry was heading into dangerous territory. I'm deeply concerned about credit quality in the overall industry, he said in the spring of 2005. I think that the amount of capacity that's been developed for subprime is much greater than the quality of subprime loans available. A year later, he said to a group of analysts, I believe there's a lot of fraud in stated income loans. And he flatly told CNBC's Maria Bartiromo that a housing recession was on the way. I would expect a general decline of 5% to 10% throughout the country, some areas 30%. And in areas where you have had heavy speculation, you could have 30%, he said. But Angelo insisted that none of this will be a problem for Countrywide. Countrywide wasn't just some fly-by-night supreme lender, it was America's #1 home loan lender. Mozilo, another executive, repeatedly stressed the high standards that Countrywide used to make its mortgage. Countrywide's proprietary technology will have it avoid any foreclosure, Mozilo told inventors, according to the Los Angeles Times. Inside Countrywide, however, Mozilo was not so sanguine. In the spring of 2006, he wrote an email describing Countrywide's 80 to 10 to 10 subprime loan as the most dangerous product in existence, and there can be nothing more toxic. Around the same time, Mozilo sent another email saying that he had personally observed a serious lack of compliance within our organization system as it relates to documentation and generally a deterioration in the quality of loans originated versus the pricing of those loans. He clearly seemed worried. The discrepancy between private worry and public proclamation would later cause the SEC, the church, Mozilo, and several of his top ideas with fraud for not disclosing Countrywide's growing rights to inventors. In Mozilo's case, the government also charged him with insider trading. From November 2006 through August 2007, he got total proceeds of almost $140 million from cashing in stock options. A huge oversight in a class action lawsuit filed against Countrywide wrote in one ruling that it was extraordinary how the company's essential operations were so at odds with the company's public statements. There is a little question that the money and the accolades had come to matter too much to Mozilo, and yet it's unclear whether Mozilo was, in fact, trying to deceive Countrywide's inventors, or whether he was so desperate to win the market share battle that he simply couldn't see the ultimate cost of the bad loans Countrywide was making. He reminded, quite simply, the truest of true believers, but in his company and in the transcendent virtue of supreme loans Countrywide made. He used to say that if 10% of supreme borrowers defaulted, that means 90% were paying their mortgage on time. Every last one of them a borrower who wouldn't have otherwise had a shot at the American dream. Angelo, who wouldn't have otherwise had a shot at the American dream. Angelo, he totally believed it. says a former executive. He'd say, when I look a homeowner in the eyes, I can tell if they'll pay. We'd say, Angelo, we don't even do a personal interview anymore. Will you stop saying you can see it, it in their eyes? As for Countrywide, Mozilla was convinced that it had become too big and so strong that it was impregnable. By 2006, it ranked 132 on the Fortune 500 with 18 to 5 billion in 2005 revenue, 2.4 billion in profits, and a mortgage originator engine that had generated a staggering 490 billion in loans. Certainly, a company with that kind of financial might could weather even a severe housing downturn. It might even help Countrywide in the long run by putting some of its prime-only competitors out of business. During an investor presentation in 2006, Mozilla read the names of some of the companies that had existed the business: Great Western, Home Saving, Glenfit, American Residential, and others. These are the very ones that equality analyst told me that I should be fearing. All gone, he said, and 10 years from now, when we read this list, you'll see that most of the players today will be gone, except of Countrywide. Yes, Mozilla saw that Countrywide was making some risky loans, but what he couldn't see, was that these loans could make his company every seat as vulnerable as the competitors he disparaged. If you're a true believer, you can ignore things you shouldn't ignore, says one former Countrywide executive. That was Angelo Mozilla's problem. Another puts in a little differently. He's a great salesman, and great salesmen are often the guys who get sold. Mozilla had long planned to retire from Countrywide at the end of 2006. He was approaching 70 years old, and he had been in the mortgage business, in one way or another, for over 50 years. Although he still held the title of CEO, he was no longer involved in the day-to-day realities of running the business, thanks in part to his undisclosed health problems. His trusted lieutenants, with whom he had built the company, were taking charge, starting with Stan Kurland, who was his designated successor. A transition had been set in motion. But in 2005, Mozilla began to feel better. As he regained his health, he became less sure he wanted to leave the company he often called his baby. Another executive recalls a conversation he had with Kurland around then. "You realize I run this company," Kurland said to this person. "Angelo doesn't know any of the details." A few weeks later, the same executive was with Mozilla, who said abruptly, all stand in interested in is the heading reports, referring to the ways in which Countrywide have had its interest rate rise. All he does is the daily age. He really doesn't want to run this company. Executive at Countrywide noticed another change too. Decision had always come from Angelo and Stan. No, they came from Angelo, Stan, and Dave Samble. At the same time, Samble and Kurland were increasingly disagreeing about key aspects of Countrywide's strategy. With the Fed tightening interest rate, Kurland, fearing its effect on the housing market, wanted to pull in the horns a little. Say several former executives, Samble wanted to keep gunning for growth, and more Mozilla was siding with Samble. Those in the Kurland camp feel increasingly marginalized. 2005 was tough, says one of them. You were always trying to say no. One former executive recalls hearing Kurland's voice, raised and angry, coming from his office during an apartment argument with Samble. The culture, which had been taught to begin with, became a culture of intimidation, says another executive. A turning point for this executive came when he saw Drew Hissinger, the 6'5" former San Diego Chargers offensive lineman, who served as Samble's number 2, starting over John McMurray, Countrywide's chief rights officers, browbeating him, so it appeared to this person. Your chief rights guy should be the most respected person in the organization, another former executive says, recalling the incident. In the fall of 2005, Countrywide's board asked Kurland for guidance of how he envisioned dividing responsibilities with Mozilla once he became CEO. What ensued became a topic of much discussion and speculation in Countrywide's top ranks. As other former executives recount the story, Kurland was furious. He didn't want any division. Either he was going to be CEO or he wasn't. He didn't want to title if he wasn't going to truly be in charge, especially given that Mozilla could be a loose cannon and that Samble, in his view, needed reining in. Kurland sent Mozilla an email that became famous in Countrywide's upper ranks, outlining his expectation for the role Mozilla would have when he stepped down. Specialty, Kurland outlined a structure in which he would be running the company and Mozilla would assume the classic role of the ex-founder, non-executive chairman of the board, an honorific with no power. Kurland says one person was even reluctant to have Mozilla continue as the company's spokesperson on CNBC. The memo led to a bitter and childish feud between the two men, one that consumed inordinate amounts of everyone's energy. Mozilla was deeply offended, and as the history goes, when Kurland tried to apologize, Mozilla refused to accept it. There's no way I deserve this after a 30-year relationship, Kurland told one person. Increasingly, Kurland felt like he was fighting a losing battle on two fronts, according to someone he confided in. A period of torture is how this person says he described Kurland's time at Countrywide after the feud began. As the feud continued to increase interest rate. It did so 17 times in a row between June 2004 and June 2006. Kurland became increasingly worried about the housing market. But within the company, he and others who felt that way were the Chicken Littles. Kurland, according to another person, also agreed with Countrywide supervisor at the Federal Reserve, which oversaw the holding company, about the importance of both the proposed industry-wide guidance on non-traditional mortgage as well as uniform standards for appraisal practices, but Mozilla Ensemble pushed back. Kurland told a confidant that he didn't think he could win a battle for control with Mozilla because the board the board was in the founder's pocket. He felt that he could have gotten the executive ranks to line up behind him, but doing so would have required cutting a deal with Dave Samble and giving him more control than Kurland wanted him to have. Maybe I'm not cutthroat enough, Kurland said at one point. Finally, Kurland reached his limit, according to executive who watches the feud play out. The entire company had become obsessed with what some called the battle at the top. It was distracting. The company needed to be focusing its energies on the housing market, not its internal soap opera. Kurland told Mozilla that if their Stanford didn't end, it could destroy the company, although no one on the outside knew it. By the spring of 2006, Kurland was essentially out of Countrywide's management. By the summer, people who pay attention to Countrywide were starting to realize that something was up. I was in Denver with Angelo, recalls one analyst. We were riding in the car, and Mozilla said something to me about how unique Samble was, that he had technical knowledge, plus he was an excellent salesman. The comment came out of the blue. I wasn't asking about Samble, and I began to wonder why he was telling me this. Was Samble in the running? He was in September 2006, just after the American banker gave Mozilla its Lifetime Achievement Award. Countrywide announced that Stan Kurland was leaving the company and Sambol would replace him as president and COO. Mozilla would stay on as CEO until 2009, by which time he would be 71. Kurland's departure was the culmination of the estrangement that had developed between the two men, who had worked together for 3 decades. Kurland left without so much as good by email to the staff, hurt and invited. He told a friend that he didn't see the point in pretending otherwise. In late 2006, another meeting of Mortgage executive was taking place, this one in Kauai, Hawaii. This was a gathering of Washington Mutual stock producers. As part of the festivities, a handful of WAMU employees did a skit about a funeral for one of its competitors. At the podium, one employee solemnly read a note. For this day, we have lost one of the true leaders in our industry. As he spoke, a coffin imprinted with a logo was carried out onto the stage by 4 Paul Bores dressed in black, wearing black sunglasses. The logo read Countrywide. So many of us wondered the dearly departed about the risky, some may say reckless, behavior they engaged in, he continued, throwing money around like Paris Hilton and selling products they don't really know or understand. As the sound of na 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 hey hey goodbye filled the room, he added that there was a bright side to passing of WAMU's biggest rival. Some really scary and dangerous people won't be on the street anymore. This was fiction, of course. At the time it took place, Countrywide was the biggest mortgage lender in the country, but the point was this: within the industry it wasn't any secret that Countrywide was out on the edge of the mortgage market, even if Mozilla himself didn't want to believe it. Even Magu, which was doing plenty of its own risky lending, enough to eventually write it down, could see the excess taking place at Countrywide. It's hard to know when the turning point took place at Countrywide. Risky loans were undoubtedly made on Kurland's watch. He too pushed Countrywide's market share ambitions. A shareholder lawsuit would later charge that Mozilla, Sambol, and Kurland were principally responsible for Countrywide's culture change and concerted foray into leverage and high-risk lending practices. According to this lawsuit, Kurland sold 192 million of stock from March 2004 to March 2008. But there were a few signals that lending wasn't completely out of control. Elliot Spitzer had launched an investigation into whether Countrywide's 2004 loans reflected racial bias. This was around the same time that Ameriquest was being investigated. In the end, Countrywide agreed to commit $3 million to consumer education, a far cry from the 300 to 5 million Americans paid to settle the charge against it. One former executive says that Spitzer staff was crawling all over Countrywide. Surely, if they had discovered the pure problems, Spitzer would have come down harder on the company. And a Countrywide, as with other mortgage originators, there had been a brief moment of sanity right before the America's settlement was announced. According to the Wall Street Journal, Countrywide was going to make it tougher for borrowers to qualify for a 1% teaser rate on its option ARMs. Internally, Cornell was pushing for that. According to a former executive, the company also issued a no exception policy in early 2006, meaning that there would be no more exceptions to underwriting policies. Besides, the government was going to issue the guidance on non-traditional loans, and Countrywide wanted to be on the right side of that. But as it became clear that any new guidance would have to death, and perhaps as Kurland lost power, the moment passed. Once Kurland was officially out the door, Samble began taking control of Countrywide. One of the first things he did was sideline some of the company's governance structures, such as its executive rights committee, according to a former executive. Under Kurland, the protocol had always been to meet roughly a half dozen times a year. Under Samble, it met once. Every meeting after that was cancelled. They devalued operational excellence and overvalued their own intelligence, says another former executive. What's more, no sooner had Kurland left than Samble and Mozilla decided to switch regulator, setting the OCC and the feed for the OTS. This move is one of the places where they made a terrible mistake, said a former executive. Having the Fed and the OCC regulate the company gave it a bit of a halo effect that disappeared when it moved to the OTS, and really insulting the Fed by quoting the regulatory court was hardly a smart move. In the end of 2006, Countrywide's underwriting lines were wider and more aggressive than they had ever been. The SEC later charged in a memo Mozilla sent to the board and all the top executives on December 7, 2006, he wrote that subprime has evolved from a sector largely composite of borrowers with impaired credit to a sector offering very high leverage and reduced documentation. And he noted the following shocking facts. In 2001, countrywide maximum loan citing subprime was 400 million, with a maximum loan to value ratio of 90%. You could do a stated documentation loan only if you were self-employed. Countrywide did not have either interest-only loans or 18 to 30 loans in its product line. By 2006, however, subprime borrowers could get a loan up to 1 million. The maximum loan to value ratio was by 10%. The only qualification for doing a stated income loan was that you were a wage earner. Countrywide now offered interest-only loans to borrowers whose FICO scores were as low as 516 and 80 to 10 loans to borrowers with 580 FICO scores. As a result, 36% of countrywide subprime originators in 2006 were done on a stated documentation basis versus just 13% in 2001. 23% were interest only, and 12% were 8 to 12 loans. To put in another way, it was hard to imagine anyone who wouldn't qualify for a countrywide subprime loan during the final truce of the housing bubble, in a lawsuit that would later be filed by a mortgage warranty insurance corporation, which had insured many countrywide loans. Investigators went back and dug up details of some of the loans Countrywide had made during the subprime bubble. One loan mortgage warranty investigated was for $360 made to a woman in Chicago who was supposedly earning $600 per month as an employee at an auto body shop. According to her loan application, the house she was purchasing was intended to be her primary residence. In truth, the woman was a part-time housekeeper who earned about $1,300 a month. She posed as a front buyer to help her sister and brother-in-law acquire the home. A few months after closing of the house, she returned to her home in Poland because she was unable to find steady work in Chicago. Was this an example of a borrower pulling the wool over the eyes of the loan officer? Not exactly. Reported to MGIC that she disclosed her true employment, her actual income, and her intention to help her family purchase the property to the loan officer. The loan officers told her she could pose as a front buyer, obtain mortgage financing for her sister and brother-in-law and avoid personal responsibility for the loan. When the loan officer learned that she was a friend of the son of a man who owned an auto body shop, she helped prepare a document for the man to stating her employment and monthly income. Then she forget the man's signature. Another borrower was supposed to be a dairy farmer making 1000 a month. He was really a milker at the dairy earning one tenth that amount and buying the house for his son rather than himself. The loan officers, according to the lawsuit, told him that he would be lending your son your credit and will not be responsible for the monthly payments. The borrower, who didn't speak English, simply signed where the loan officer told him to. A, a sales executive for Bay Area sales and marketing earning 8,700 a month had actually been unemployed since 1989 and had no income. She got a refinancing, a house in Atlanta that had been appraised for $395,000 was worth no more than 2,700. A borrower's tax return claiming earnings of 17,661 was fraudulent and his bank account was non-existent. A borrower who claimed to be an account executive for G&G Investment in Santa Clara, California, another non-existent firm turned out to be a janitor making $3,901.58 a month. She never made the 300 down payment Countrywide was claiming. She got a house, according to the mortgage warranty lawsuit, by about 2006. Countrywide's internal rights assessors knew that in a substantial number of its stated income loans, fully a third borrowers overstayed income by more than 50%. Countrywide also knew that many appraisers were overstating property values to drive originators by making loans appear less risky. Countrywide deliberately disregarded this and other things of fraud in order to increase its market share. But those prime loans weren't the only thing that increased the risks drastically at Countrywide. In that schizophrenic email Mozilla had sent back in May, he also wrote that we must pay special attention to HELOCs and pay option, with interest rates continuing to rise. Unabated HELOCs will become increasingly toxic. As for pay options, the bank faces potential unexpected losses because higher rates will cause these loans to reset much earlier than anticipated and as a result causing mortgagors to default due to the substantial increase in their payments.